Good evening, everyone. So, I'm going to cover do you know how you play reversals and how you can identify the best names to trade reversals. So, before we go there, understand that reversals are kind of an effect. Okay, so reversals are happening because something has happened on the left side of that reversal, like how market has fallen, how it has formed bottom, and all that stuff. So I'll just quickly give some brief about how a base formation happens. So in general, if you have to split a base into multiple parts, then you can split it into three parts in general. Okay, so the first part is kind of a left side of the base, which is nothing but this side. Then you'll call it as probably the bottoming of the base, which could be sharp, or which could be where we are meeting the demand and supply equilibrium. Okay, so in general, if you understand that how any market can bottom or how any market will break out, the only reason is a market bottoms out when there is a demand and supply equilibrium. What does that mean? It means that the enough supply which started pulling the market down from the left side has now stopped coming into the system. Okay, so now let's look at what happened in the market. So this is one expansion which we saw, which started from mid of October, I think 26th 27th of October, right? So we moved up all the way here. So I'm not going to cover how these expansions can be split into multiple parts, but we are only focusing about the base. Okay, so if you look at this particular base, we saw the left volatile side of the base, which started during the first week of the February, right? So as I said, like in general, the left side of the base is always volatile, right? In 2 or 3 days, market fall kind of sharp, and then you know we we see that I mean, obviously there could be a further selling after this 3 days of selling, but in general, that further selling plus the first initial sell off is kind of highly volatile, like because the supply is pretty much exceeding the demand at this particular time, and we start to see a sell off. So this is what we saw here, right? After that, there was a bullish counter attack, and we probably just stopped out on this bullish counter attack somewhere when the first and the second set of the active buyer became active. So this is the first active supply which market is trying to cover at this particular point of time, right? So but you see that as soon as we are approaching this thing, we started to see a sell off again. So what does that mean, right? So that means that whosoever was actively selling it here, he is comfortably selling it more. So this is nothing but the active supply which started to appear during the first week of February is still active. They are not yet over, and this is not yet absorbed, right? So now coming back to the this side, so this is what is getting formed as of now. Okay, so the left side of the base is how it will progress. So we have to see how many times this active supply gets hit and how many times they are still active, right? So this is the first time this active supply is getting tested and we see a sell off. This is where I posted on Twitter that I'm going on a cash, right? So 35% was the position size which I was holding around these level with 4 or 5 names, right? So after that, if you see, again market is trying to rebound, but the same set of active sellers are acting again, right? And we see a further sell off. So now, how does supply get out of the system, right? There are two ways. One way is like you'll start to see a tightness around the base formation, bottom of the base formation, like something of this sort. Okay, so something of this sort probably you'll start to see when the market is getting tight and now starting to see a equilibrium, right? Or the other case will be where we see a sharp sell off, which is nothing but capitulation. Okay, so this is what happened in this case, or in the last base formation on the mid and small cap, right? So if you look at this particular area, so what does that mean? The people who were waiting for this complete base formation, let's say there were some strong hands which did not sell it off during this particular time period, they are also freaking out now, right? They also start to panic and they think that markets are going to go much lower, and they also throw in their towel. So this is nothing but a high price and high volume capitulation which happens, right? So this particular 3 days of carnage is nothing but when most of the stock fell down probably 15-20% in just 3 days of this fall, right? So this 3 days of fall, what does that mean? That means that people who could not sell it or who did not want to sell it, and they thought that this is a normal base progression and they'll hold on, keep on holding their holding. I'm not talking about just the swing participants. There are multiple participants in the market, right? There are few participants like who trade it on an intraday basis. There are few other participants who trade it on a 3 to 5 days basis, because you get a 5 days of margin from the broker to hold your positions. There are few more type of traders who trade it on a swing. People like us, we take positions for 3 weeks to sometime 8 or 12 weeks type of trades, right? And then there are people like who buy it for a medium term to long term. Yeah, so we are not going to get into that part, like who all participants are selling it here. But in general, if you see a big capitulation like this is nothing but these are the people who just wanted to hold it during this particular period, but now they are also not feeling comfortable. Or some people like who get panic and they start to sell off everything. So these are the people who are the kind of the active, who are the like people who were holding the supply, which has come into the market now. So what happens when the last set of the people who had the courage to hold it, they also could not hold it, is it's nothing but the supply which they were holding, that supply has already come into the market. So what happened after that is reversals. Okay, so if you understand this part, then only you'll be able to understand reversals completely. So now what is the phenomena for the reversal, right? So reversals, as I said, reversals are effect. If there is no such capitulation selling like this, there won't be any significant reversal on the next day. So you have to understand this concept completely, right? And I mentioned on the Twitter also on this particular day that if there is a further sell off tomorrow, it will offer us an buy opportunity, right? So this is what has happened. After that, we saw a bullish counter attack, then probably a wedge pop type of a formation, and then we progressed higher and just covered all these three supplies, which market has which like people who are kind of the last strong hand, they sold, and we have covered all these three supplies, right? So how do you trade reversals during this particular rally is what we are going to study today. Okay, so first thing to understand is reversals are effect of this thing. If there is no such capitulation volume at the end, or if there is no such scenario like this where we are seeing a tightness after a sharp sell off and now the demand supply equilibrium has come, we would not expect any reversal to happen. So this is the first case which I am covering here. This is another case which you can probably uh, you know uh, identify and then deep dive like how stocks behaved there. So let's go back to the original idea of trading the reversals. So now at this particular time, my trade plan says that I have to trade the reversal. Now the next thing is how to identify which stocks I have to choose for trading the reversal. Before we go to the selection part, I just want to say reversals are your mathematical way of trading. Okay, so when I say mathematical way of trading, basically you're not looking at any you're not looking at a win percentage here. Okay, so your win percentage can drop to maybe 15% or 20% also. Let's say you try with 3 or 4 names. In general, like whenever I trade reversal, I don't trade it on a one or two stocks, right? I trade it on a cluster of stocks. The cluster for me is minimum three. It can go to three, or it can go to four, or it can go to five, right? I don't care like if I'm just buying two names or one name and I'm trying to see how market behave, and how those one or two names are going to show me the complete market direction. So that's why I trade reversals always in the cluster. I trade it in a cluster of either three, and if those three works, then I try to add one or two more names, which gives me a comfortable position size of open risk on the portfolio to 1.5%, and allocation goes up to like 75-80% on the portfolio level. So this is what I do in general. So I try to do it on a cluster basis where I risk out 1% of my capital into 3 or 4 names instead of putting it into one or two name, right? So now when I say that reversals are mathematical equation, the reason for that is this is going to be high volatile day. Okay, so whenever we are on a reversal day, reversal days are not a because the market is still meeting the demand supply equilibrium, right? We don't know if there is a further supply which can hit off during this particular day, and we will see a volatility even on an intraday basis. So always assume that whenever you are trading reversals, if they work, obviously, like probably you'll get 100% of the win rate that day. But consider on the worst case scenario, like how much win rate you can expect when you are trading a reversal. So if even if you're on a 20% win rate on this particular day, you will not lose much, right? The reason for that is all the reversals you are going to trade it on a low allocation, sorry, low stop loss, right? The reason for that is, in general, try to understand that you are trading it in terms of R, right? So if you're taking, let's say, 5,000 risk on one position and you're taking four positions at a time, that means you're taking a 20,000 risk on four positions, right? And in general, if one out of those five name work, you'll be sitting on a 6 to 8 hour gain, right? So what does that mean? Even this complete reversal fails, the worst case scenario would be either you'll be losing very less or you will be losing almost break even, right? You will not be making something, you'll not be losing something, right? So this is why these reversals are kind of my favorite pattern to trade. So it gives you very high risk reward ratio. If they work like in a cluster. Like if you bought five stocks, there are high chances four of them or three out of five will work, and those three or four will give you like 8 to 9 hour type of returns in just 1 or 2 days. The reason for that is you are taking them on a very small stop loss, like 1%, 1.5%, right? The reason for taking 1.5% stop loss is because you know that the accuracy, you're not targeting an accuracy here, right? You're just targeting it based on the mathematical equation. So let's go back to the selection part, right? So I hope you understand like why I traded all these with just 1.5% stop loss instead of, in general, like I take 3.5% to 4% average stop loss. The reason for that is I'm trading just a mathematical equation here. I'm not even accepting that all of my trades are going to work or 50% of my trades are going to work, but I know that if some of them work, they'll work like magic. Okay, so this is how I approach the reversals. Now get back to the stock selection. Okay, so these are the stocks which I traded: Inox India, JSW Infra, Hindustan Copper, Delivery, Algae Cube. These were the five stocks which I chose for the reversals. And later on, like I added Triveni Turbine, Jyoti CNC, HEG, and retraded Inox India. Right, so go one by one. So why I am trading Inox India is the first question, right? I know that I'm expecting a reversal on 14th March, and I am going to plan a trade here, right? So now look at what happened in this guy, right? As I have said multiple times that IPO are a special case where it's a fight between the institutions. It's not a fight between institutions and retail. That's why the IPO makes so strong moves in the initial IPO advance phase, right? So if you look at this particular guy and if you look at what happened during this particular period, this is nothing but a case of strong urgency. Okay, so you are seeing someone who is buying, he's buying with such an urgency that he's comfortable to buy it at 946. The next day is even comfortably buying it at 1080. 3 4 days later he's comfortably buying it at 1160 odd levels, right? So try to see it from an institution point of view. They are not trading it based on some moving averages or something like that, right? They must be getting some range that, okay, so this is the approval which I got from let's say my management, or you can say board, right? That I can buy Inox India between certain range, right? So you want to see whether they are protecting that range or the range is getting lost. Okay, so what I'm trying to see here is, first of all, I want to basically trade those names where I see such type of an urgency, that they have got a range and that range is being played out multiple times. This expansion name. Okay, so now Inox India came back to this odd level, right? The first day of the breakout, I mean the breakout happened here, we saw a pullback. So this is the first informed buying which we are seeing in the Inox India during these 3 days, right? So I want to see how this stock react whenever it come to this particular area, right? This is why I chose this name, right? So I want to see that if someone was interesting to buy it 2 weeks before, he must be interesting to buy it again whenever this range is coming back, and whenever the prices, I mean the Inox India's price is coming into the same range from where the first set of urgency arrived. Okay, so this is where I started buying this guy. Okay, so this was my selection criteria in Inox India. Let's go to JSW Infra. Now if you look at it, JSW Infra, the same story, right? We saw a breakout from here, and this breakout was institution led, right? We can see the urgency, we can see a strong volume and demand emergence here. Now we have fallen because the market conditions have turned bad, and the people like who bought it during this particular upswing, they might have started to book profit. And in general, I also mentioned that stocks are just like your car, and they need a fuel to go up. As soon as that fuel has stopped coming, the vehicle will start to come down. So this is nothing but a normal base building which is happening here, right? And this capitulation volume which we see, and the capitulation price which we saw on indexes, the same behavior is seen here also, right? The stock is down from 252 to 213, like almost a 20% drop in 2 days. The good part is after this 20% drop, it has come back into that institution range where previously those institutions started to show you the urgency, right? So if they started to show you the urgency around 220 odd levels, you also want to play, right? So you also want to be part of that move. So I did not buy it immediately, and I have shared it on Twitter also, like on a lower time frame how it looked like, right? So if you look at this particular bar, right? So if you look at this particular bar, this is the price action in the morning, right? you s- Immediately the stock has come down to that 220 range. We are starting to see that that demand has started to emerge again, right? So this is what I want to see. So I want to see that they are protecting their range and they're still buying it, and their buying is not yet exhausted. Okay, so this is how I planned a trade in the JSW Infra. Another thing to notice here, this is another IPO name, right, where the fight is between the institutions. Now go back to the third name which I traded, which is nothing but Hindustan Copper. As I said, I want to trade it in a cluster. I will never trade it in just one or two name with more allocation. Probably I'll split that allocation into three or four parts, right? So Hindustan Copper is another name. Now if you look at Hindustan Copper, this particular move, right, this 20-24% type of a move which came here, it was purely an earning led move, and the stock is already in momentum before that, right? It is just forming a proper base. As I said, left side of the base is highly volatile. Then we start to see a demand supply equilibrium. This is nothing but this particular case which we covered, right? So this is nothing but left side of the base followed by a demand supply equilibrium. So this is what is happening in a Hindustan Copper, right? Now this is a case of capitulation volume and capitulation price, when the price dropped almost like 286 to 232, which is nothing but 20-25% odd in just 3 days, right? Now you want to see the people who are interested to buy it based on the earning, and the people who brought this move plus the previous move is already active. You want to see whether those people want to act again or not, right? So these are kind of an ignite bars for me. Someone who bought it during this particular day, whether he's going to act again or not. If he is going to act again when the price is coming back to these levels, that is nothing but a decision point for me to take a reversal. So this is the third trade which I took around 246 odd level, and it went to 270 next 3 days, right? So delivery was my fourth name. Again the same scenario, pre-earning move which we saw. After that post earning move which we saw, bad market condition, we fell down to the same range, and the same range is now being protected, right? So this is also, I took it around 433. Go back to the fifth name, LGA Cube. So this is what I want to see, right? So we saw an up move, and this is nothing but earning day reaction, when the stock went up almost like 15% in a single day, cool down, and a follow through earning buying, right? So this is nothing but this is the buying which came from the institutions, right? This is what you can predict it from here. So now we have come down to the same range. I want to play the same theme, right? I want to see whether the guy who bought it on earning day, whether they are active or not, right? This is what we saw. We saw a pullback, and we saw a follow up buying after that also, but this got dissolved and I stopped out on a break even price, right? So these are the five names which I traded. This guy moved up almost like 8% in a single day, and I booked around 7 hour on this particular name. This guy also moved like close to 220 to 240, almost 10% in next 2 days, right? So this is what I said in the beginning. You are trading a mathematical equation here. Whatever works in your favor, it will give you immediately 8 or 10 hour in next 2 3 days. Whatever does not work, like a case of LGQ, you'll just get out, and it can happen to five of them also. I'm not worried, but I know if five of them fails, I lose around 1.5% of capital because I have allocated it in a clustered manner. So this is all about reversals. And coming back to the trade management, I have shared it live on my Twitter why I booked it. In general, I try to book it on one third and one third position at 3 hour, because I'm trading just a mathematical equation here. I don't know if the demand supply equilibrium which started, it has still met, until and unless we know that the first active supply is over. Okay, so after we are above this and we are comfortably seeing a positive action, then only I can say that whatever we have reversed from here is going to have a further leg up. But during this particular period, I want to book maximum of my gain. I don't want to give it back to the market. This was my trade plan. Like, I wanted to see an action, a positive action, and I wanted to see how we behave before we hit the first supply. And I wanted to book maximum of my gains in the one third at a 3 hour, and remaining like at an average of 7 to 8 hour. Right. The reason for that is, once this active supply hit, there are high chances like we can fall into the second scenario, which is nothing but a scenario like this, where we swallow this demand and supply for few more days and then go up. So this is all about reversals and how I trade reversal in general. Thank you very much.